Good afternoon, everyone. I can see that we've got quite a good number of attendees with us now, so we're going to start, and it is 12:30. So my name is Andy Chamberlain. I am the Director of Policy at IPSE, and I am joined today by my co-presenter and colleague, Alistair Hutchinson. Are you there, Alistair?
Yep, I am. Good afternoon, everyone.
Great. Now we're going to try something slightly new today because as you know, we're also being joined by Sir Ed Davey, and we thought it would be nice to try and do this where we can all see each other. So we're going to turn on our webcams now, and hopefully you will be able to see me as well as hear me and see the slides too, if all is well. So let me know if that's working for you in the questions box. If you could let us know whether you can see us and hear us and see the slides too, that would be great. And while you're doing that, I'll just explain how this is going to run today. So Sir Ed is going to join us just after 1 o'clock. So in the first part of this webinar, Alistair and I are going to talk through what's going on with the coronavirus schemes which have been announced, a little bit on the back to work programme as well that the government has been talking about. What are our thoughts on that? What's IPSE saying around that? And then when Sir Ed has finished, he's got a meeting that he's at the moment, he will come online with us, hopefully around 1:10, and we will then put some questions to him around these schemes and what he and the Liberal Democrats think of what the government's done so far and what they should be doing. We'll be asking him about the SEISS scheme, the job retention scheme, what more help can we give to the newly self-employed, what more help can we give to those who work via their own limited company. We will touch on IR35. If we have time, we might even touch on Brexit as well, which is certainly one of his a topic that he has talked about a lot. So without further ado, I will. And by the way, do keep your questions coming in. We've had some questions in advance, which we have collated, and we will put to Sir Ed. But keep questions coming in, questions for us and IPSE, that's fine, and also questions for Ed Davey as well. So just so fire those in there, and we will do our best to answer them. We may not get a chance to do all of that, but we always look at all the questions at the end of the webinar, and we use them to update our FAQ page on IPSE's website as well. Okay, so what we're going to cover today is the update on the government guidance, the latest on IPSE's campaigning, and then we'll, as I've explained, we'll have the Q&A with Sir Ed Davey. But first of all, I'm going to hand over to Alistair, who's going to talk about the roadmap for getting us all back to work.
Yeah, I don't think we'll kind of take up too much time on this because I think everyone's sort of following the news and seeing the daily briefings as they come in. But just a quick kind of recap if you've missed any of that recently. So we had the government's kind of 50-page roadmap published at the start of last week, and I think really what that's saying is it's setting out kind of 3 main phases, and the kind of extent to which they will start easing restrictions and will move through the phases is dependent on those 5 tests that you might have heard the government talking about as well, which is things like the NHS's ability to cope, seeing a sustained kind of decrease in number of cases and number of deaths as well, in hospitals as well. And I think the only one of those tests that's really outstanding at the moment, where they feel that they are kind of getting towards it but need a bit more time, is on the testing capacity. That was one of them, and I think certainly for the main next kind of opening up, which is the schools in June 1st, they feel that they need to have that testing capacity in place before that can get going. So as I say, the basic outline at the moment is government saying, you know, if you can work at home, then you should really be continuing to work at home. There has been a slight easement on, you know, the ability to go and meet other people from different households, but it's really 1 per person at a time, and they've kind of lifted restrictions on the amount of time you can spend outside and where you can go as well, with the view to kind of making sure that people are getting enough kind of exercise and able to kind of get out of the house. And then, as I said, in terms of the kind of opening up stages, I think really the next big marker is June 1st. So not before June 1st, but the government's next thing will be for Year 1 and Year 6 groups to go back to school. and then some reopening of non-essential shops. I've certainly seen, just even in where I live down in Putney, there's been, it's clear that a few kind of small businesses are beginning to get ready for opening doors again. But then the next stage, which will not take place before July 1st, and again is contingent upon those kind of government actions, is around the hospitality sector, slightly trickier things, which will probably not be before autumn in terms of cinemas, pubs, gyms, and hairdressers as well. I think those are kind of the next and last set of facilities that will open. And then Andy, if you want to go on to the next slide. And so these are really the key bits of guidance for you in terms of your self-employed businesses and working safely. As I say, the cardinal thing at the moment is if you can work at home, then you should continue to work at home. But for those who can't, so if you're a tradesperson or you're perhaps working on a construction site, or you're doing work that doesn't require you to make a trip into the office for whatever reason, the kind of things the government is saying you should do are basically just maintain that kind of 2-meter distance as much as possible. Think about kind of fixed terms or partnering, as we've noted down there. So you're always trying to work with the same people. There should be a kind of system of shift patterns in place as well. Much more rigorous attention being paid to cleaning of door handles, desks, equipment, all those kind of things. And also just making sure that you're carrying out a kind of health and safety risk assessment, essentially. There is a slight tweak in this in terms of if you're self-employed, where you don't actually have to formally record this. That's also if you work with less than 5 people as well. So I think, the government guidance is very broad. It's a bit kind of one size fits all, and perhaps doesn't capture all the differences within, working patterns, and certainly the self-employed as well. But they've given a kind of broad steer. And if you want kind of more specific information on the sector that you work in, they publish specific guidance for about 8 different areas. So construction is one, factories, plants, warehouses is another, offices and contact centres is a further one, other people's homes. So I think if you've got concerns about kind of going back into a workplace, then government has put kind of some guidance up there to give you a bit of a steer. But I think that's really all I want to cover at this stage on that.
Thanks, Alistair. I mean, it's fair to say, isn't it, that when the Prime Minister gave that statement, was that 2 Sundays ago, that the big Prime Minister statement that we were all wondering what was going to happen with lockdown? And it's when this sort of, we need you to go back to work, but work from home if you can, and don't use public transport, and try not to, you must keep up with social distancing. And there was a lot of confusion, because within that, there's quite a lot of conflicting messages, isn't there?
Yeah.
If you live where I live and you work in central London, then everyone gets on a very, very crowded train in order to do that. So I think that the government have come in for a bit of flack over this and what really is the message. And I think self-employed people are absolutely part of that, scratching their heads and thinking, is it safe for me to go back to work? Am I supposed to get on that train and go into work, or am I not supposed to? This is a concern, and if we have time on that one, I do intend to ask Ed Davey about that when he joins us shortly after 1 o'clock.
And I think it's interesting. Just a very quick point. It's quite interesting because this sort of, as we move out of this, it takes us back slightly to where we were at the very beginning of this crisis, when we didn't think that there would be a lockdown, which is getting into almost individual choices about, the relative trade-off between your health and, perhaps the risks that you take to get some income in and go back into work, which obviously will feed into what Andy's just about to talk about in terms of the government support schemes that are there for the self-employed. Do you feel that you've got enough of a safety net before you can go back into your workplace as well?
Yes, what a brilliant segue that is, Alistair. Thank you. You actually stole it from me. I was about to use the same segue, because this was exactly what IPSE was talking about when we were calling for the government to set up what we were, a couple of months ago, we were calling a temporary income protection scheme. Well, they came up with the self-employment income support scheme, which was in response to what we were calling for. And it's very good, but as we will see, and as many of you will already know, lots of people are excluded from it. It's quite good for people inside it, and there are problems there too, but there are lots of people who just fall outside of it. So that's definitely one of the areas that we are, and today we have sort of reissued our call to extend this scheme, because what we're saying is that thing that Alistair was talking about, no one should be forced to choose between their health and their income. And this scheme is all about helping people that aren't really supposed to be going into work because it's dangerous for the spread of the coronavirus. And so what we're saying to the government is that threat is still there, and therefore we need to have something on extension of this scheme. But let's just quickly go over again what this scheme is all about and how you are eligible. Well, you can now go online, of course, and if you were to Google, am I eligible for the self-employment income support scheme or claim a grant under the self-employment scheme, you will quickly come to a gov.uk page, which will ask you to check if you are eligible. And you will go in there and you will put in your unique taxpayer reference number and your national insurance number, and they will tell you straight away whether you are eligible or not. Now, to be eligible, you must have done a tax return for the 2018-19 tax year. If you've done them for the 2 years before that, then that will also apply. So they will also, so they'll average it out over the years. So they'll also look at those tax returns. If you have earned more than 50,000 in average profits over those 3 years, you are excluded from the scheme. You have to have earned less than that. Your income must be a minimum of 50% from self-employment. In other words, more than half your income must have come from the self-employment. If you only had a little bit of self-employed income, but you had more employment income, you're not eligible for the scheme. And it doesn't cover you if you work for your own limited company. You can't, it's for sole traders only. IPSE said it should cover people for their own limited companies, and the problem was the dividend problem. The government couldn't work out how they account for the dividends, or so they say. It also doesn't cover people who are newly self-employed, so people who didn't do a tax return in 2018-19 because they weren't trading then, they've only been trading since April 2019, they are not included in this. We'll talk about that a bit later on as well. So but if you did do your tax return for 18-19, you earn more than 50% of your money through your self-employed trading, you're not working through a limited company, and you earn less than 50,000, then you are entitled to this. So you should go online and Google claim a grant under the self-employed income support scheme, and it will take you through the process. And it's a relatively easy process to do. How much will you receive? How do you get it? Well, the grant covers March the 1st to the end of May. And the way that they work it out is it's 80% of your average income. There's a £2,500 per month cap, and it all gets paid in one lump sum. There is a link there for you to check your eligibility, as I was talking about. And that bullet point around the code, I think, because that date's obviously over now, but you can still go on and use this. There is actually no deadline at the moment for this. So you could do this next month. You could do it today. You could do it whenever. Now, at some point, the government will close this scheme, and they will close off even for this period. But they'll have to publicise that quite widely. At the moment, you can go on, and my understanding is that those initial people received that code and a date, and then they said, okay, yeah, you're eligible. Log back in next Tuesday, and we'll take you through it, and you can claim your grant. I think, I'm not sure about this, I think what's happening now is you can just go straight into it because they've already dealt with so many of that initial, it was all about managing people onto the website. That's why they did it in that way. And I've been through this process with someone that I know, and it's quite an easy process. But when we were invited to go back on, it did say, we're very busy right now, please wait. We waited for about 10 minutes and then we were allowed in. I think that now, I think I'm right in saying people are just going straight through. Once they award you the grant, you get paid within 6 working days. And I know of 2 people who have been already paid, and I've seen lots more online on Twitter and things of people saying that they've received their money. And I think that they've received it well within that 6 working days time limit after they filled in the form. So if you haven't done it yet, if you're a sole trader, right, if you're working for a limited company, as many IPSE members do, unfortunately, this scheme won't help you. We think it should do, or we think there should be some more help for you, but this scheme doesn't help you. But if you're a sole trader and you were trading in 18-19, you did a tax return, go on, follow that link and make the claim, because it's a pretty simple process. Now, company directors can make use of this one. So this is the job retention scheme, the JRS or the CJRS, the coronavirus job retention scheme. So this is all about the furloughing of employees. The idea is that a company can furlough their employees. They can say to their employees, look, because of the coronavirus, we don't have the work for you to do, so we're going to furlough you. You stay at home, not working, absolutely not working for them. They can go and work somewhere else, but not working for them. And the government will pay that company to pay that person 80% of their normal salary, up to a £2,500 a month cap as well. So that's been working pretty well as well. So that's been pretty smooth. Now, the big question was initially, can company directors make use of this scheme? And the answer after a while came out, yes, they can. IPSE were pretty clear that they could do from the start, because we spoke to the Chancellor and the Chancellor told us that they could. But it's only on their PAYE element of their income. It's the salary part of their income. And lots of company directors will be advised by their accountants to take a very small amount of salary, not necessarily very small, but usually around about £8,000 a year for tax reasons, and take the rest out as dividends. Perfectly legal, nothing wrong with it. The government is saying they don't know what to do about the dividend part of the income. They don't know how they can put something like the 80% calculation next to it, because they're saying they don't know where those dividends have come from. They could have come from a share portfolio and not from someone's own company profits. Now, we have been saying, look, there's something that you can do about that. You can pay people and claw it back later. You can ask people to submit the information which shows where the dividends have come from, but they haven't been interested in following it up. There's one other problem with this too. So even if you then decide, okay, fine, I can't get my dividends, but I'll do it for my salary element. There was another issue which came up, which said that in order to qualify for this, you must have had an RTI event before the March the 19th. And many company directors will pay themselves one annual lump sum of salary. And they might do this at the end of the tax year, because your accountant says, look, you haven't done this yet, you better do this, you better get it in during this tax year, because it's more tax efficient to do it that way. So you do it in late March or even early April, and therefore you're excluded. And lots of people are in that camp as well. And we've raised this with the Treasury Select Committee, and we've raised it with government, and we've said, can we do something here? It would require a change in legislation to make that change. And we still think that they should do it, but again, a bit of a reluctance. I'm not sure, if I'm being honest, I'm not sure it's going to happen. And then finally, for this cohort of people who work for their own limited companies, many IPSE members do. The one issue that they're really bothered about is IR35, and the government at the same time is not being particularly helpful to them via any of these schemes. They are pushing ahead with the IR35 private sector change. And on Tuesday of this week, we had a Ways and Means resolution which was shoved through Parliament. It doesn't mean that IR35 is definitely locked in for 2021, but it does mean that it's moved on now to a committee stage. So it is progressing through Parliament. David Davies MP tried to introduce an amendment to the finance bill, which would have meant that IR35, the private sector changes, don't come in until 2023. But unfortunately, that was unsuccessful. So we haven't given up. There's still plenty of fight to go on this, and it's still got to get through committee stage. And we still think that it's a disastrous thing to do at this time in the sort of economic cycle to lock in these changes. But that is the government appears to be intent on doing it, despite the House of Lords report and everything else. I will probably get a chance to ask Sir Ed Davey about this later on when he joins us. So we will come back to that issue. But I've also done separate webinars all about IR35, and you can find them on our website. So if you want to know more about the story of IR35 and the work that we're doing to oppose the government on that one, then I would recommend that you check those out. I'm going to hand back over to Alistair now, who's going to talk through some of the other support that's available.
Yeah, I've also noticed a few kind of questions just dropping in. I think we'll probably have time to cover those before Sir Ed comes on just between myself and Andy. So I see there's a few questions in terms of what is an RTI event, what does this mean for umbrellas and things like that, but we can possibly get to those before Ed joins. In terms of other government support, we've done webinars in the past where we've kind of gone into each of these in a lot more detail, and I think these are all, you know, in terms of what's out there, we know these are kind of the existing other options that are there for self-employed people if you miss out on the SEISS. I think for most people, if you are kind of looking at something which is quite a big way to get some cash in, I think the new bounce back loan scheme that was introduced by the government is probably the main port of call. I think this was really introduced because I think the government really recognised that there were problems with the one which is geared more towards kind of medium-sized and larger businesses, which is the coronavirus business interruption loan scheme. I think they felt that there was just not enough take-up of that. The money was not getting through the banks, the creditors, as quickly as it should have been to people. So they've come up with a kind of an even kind of, you know, easier to access loan essentially. And so the bounce back loans are available for, I think, 25% of your business turnover up to a maximum of £50,000, and the government guarantees 100% of the loan, and it's interest free as well for the first 12 months. I think anecdotally this actually has had huge take up. I just before I came on this, I actually jotted down the number that the Treasury is putting out. So they've had 464,000 of these loans approved, and about 14, totaling a cost of about £14 billion. So it's expensive for the Treasury, but it just shows that there was a real kind of need that had to be addressed in terms of real kind of micro businesses, small businesses. And they are, you know, just to stress, they're open to limited company directors, they're open to sole traders. You can go online and see the accredited lenders who are providing it as well. So they're definitely an option worth looking at. As I say, the original kind of loan scheme, the coronavirus business interruption loan, which was outlined back in the budget actually in March, that's still there. That's the one with the 80% guarantee from government, and still kind of quite reasonable in terms of access. But I would generally suggest that that's probably for those businesses that are really looking at, you know, needing quite a big injection of cash and are probably looking forward at least, you know, 12-18 months down the line in terms of how they'll restructure their business kind of once we come out the other side of this. In terms of other things that are available, there is some grant funding out there. It depends where you are and what you do in terms of which sector you operate in. We have a list of grant funding that is available. We've put it up on the IPSE website. I would say particularly if you're in the creative industries, there are a lot of kind of hardship grants being organised by Arts Council England, Musicians Union, these kind of groups, for authors and writers as well. So there's a few kind of dedicated industry funds that are available. A few local authorities as well I know of are doing, they got a big amount of funding again back at the budget for a so-called hardship fund. There's a few local councils that are making this directly available for self-employed people, so always worth just checking out with your local council if that is the case. If you're a self-employed person with a business premises, with a kind of physical property where you do your business from, I would generally say you should be covered by some of the government supports that's been made available. If you pay business rates and if you're in relief of small business rates relief, if you get small business rates relief, then there's a lot of support available for you, particularly if you are in those kind of hard hit leisure, hospitality, retail sectors as well. And then one thing to note for those who are newly self-employed, if we do have anyone who is listening into this webinar from Scotland, where I'm from, the Scottish Government there has announced a dedicated fund for newly self-employed people who miss out on the SEISS scheme. I think it's funding of just up to £2,000, but again, that will be administered by your local council, but that's a dedicated kind of thing that they've put in place. And very last thing on that as well, the government has also given additional funding. I need to get the details completely right on this, but if you're a small business and you work in, I think, a shared workspace, so if you don't pay, you know, kind of business rates, but you pay rent and you operate in a shared workspace, then the government has provided funding, I think, that you can apply for and get cover for that as well. In terms of other things I've mentioned before on previous webinars, the kind of range of tax help that is available as well. There are a number of extensions that you can either take up automatically, the main one being a deferral of VAT payments, and also of July's payment on account, which can be transferred into January 2021. And also HMRC's time to pay service is worth getting in touch with as well if you want to organise a kind of tailored agreement with HMRC in terms of deferrals. That can be on kind of any kind of tax that you have to pay, including corporation tax as well. So again, there's kind of support on that side. Not ideal, but possibly something you might make use of. And lastly, we've spoken a bit about universal credit on previous webinars as well. It is an option that's worth looking into. There's been a few kind of questions on how that interacts with the SEISS, and I think we're pretty clear, and the government has been pretty clear. It certainly does not affect the amount of the grant that you will get if you're eligible for SEISS. That grant is calculated using your trading profits and against kind of your other income that you had. But what it will mean is that when you get the grant, that will then be treated as income for your universal credit application. The government's made a couple of changes to UC specifically with the self-employed in mind, just to basically make it similar treatment to if you're an employee going through that process, in terms of if you've seen your work drop off, then you should basically be covered for the loss of that money, in terms of you'll see an uplift in your UC grant, which was not always the case previously with the self-employed. So I think those are the main things. If you've got specific questions on universal credit, then do drop them in to the question box, and I'll try and field them, or just get in touch with us directly at IPSE as well. But I think those are kind of the main pieces, and I'll hand back to Andy just so that he can kind of give you an update on what IPSE is campaigning for and what our kind of big lobbying activity will look like for the next few months.
Thanks, Alistair. I'm just furiously we've had lots of questions, which is brilliant. I've just been trying to scribble some down whilst you were talking there. So what are we calling for? Well, we are calling for the SEISS scheme to be extended. This is now crucial. The job retention scheme, which is largely for employees, but as we say, company directors can partly make use of it. That has been extended now till October, though the government has said that it will be changed. So essentially, it will become a bit less generous. The government will be looking to pay less than that 80% into those furloughed employees, and the employer will be asked to make up the rest, I believe, is the plan. But conspicuous by its absence from any of these announcements is what's going to happen with the SEISS scheme. We haven't heard anything about it at all. And I've spoken to the Treasury and asked them. Now, I've got to say, credit where credit's due to Treasury and HMRC for getting these two schemes set up and getting them working and getting payments into people, which has all happened, definitely. And millions and millions and billions has been spent on them so far. So they've done well there to get this set up. But what's happening with the future of the SEISS scheme, we don't know. So IPSE is calling on the government to extend the SEISS scheme to make it at least in line with the job retention scheme, i.e. plot out some sort of future for this scheme, because people need to know what's going to happen. The money that they have now was always for a payment up to the end of May. That's exactly what it says on the Gov.uk website if you go and look it out. So what's happening in June and July, we don't know. Now, we've had a question actually from someone saying, will it be extended? What do you think? Is there any chance of it being extended? No, I really do think that there is a chance of it being extended. In fact, I always sort of imagined that it would just be extended for as long as it was needed. What I do think might happen is it may begin to be diminished in some ways. So in other words, the government might make to look it a bit cheaper because it's very expensive for them. So they may look to make it a bit less generous. And there's various ways that they could do that. They could decide that the £50,000 cap should be reduced to say £40,000. Now, we think that we don't like the £50,000 cap. In fact, we've been saying there should be a taper after that point, because people just go from earning quite a lot to earning £1 more, and then they get nothing from it. So that doesn't strike us as a particularly fair mechanism or way to reduce it. They could look to reduce the 80%, which is I think what they're going to be doing in the job retention scheme. But in the job retention scheme, you've got an employer who the government are going to ask to make up the extra percentage. You don't have that with self-employed people. So I think that that's a bit problematic as well, and I'm not mad about it. The other thing that they could do is reduce the monthly cap from £2,500 to something less than that, so that no one's going to receive that big amount. Now, I prefer this one because I'd rather self-employed people got the maximum support they can. That's what I'll be campaigning for. But if we are going to reduce it in some way, I think that one might be a fairer way to go, because it means that those on lower incomes will continue to get the full 80%. Full 80% is a bit of an oxymoron, isn't it? But you see what I mean. They'll continue to get the 80%, whereas those who are on the higher incomes will have that diminished a little bit because you're going to reduce that monthly cap, but they'll still get something. So I think that might be the way if they are going to wind it up. But what we first of all need to know is that it's going to continue at all, and we haven't had any confirmation of that. Yeah. So the question, is there any chance it'll be extended? Yes, I think that there definitely is a chance it will be extended. And in fact, I thought that if you'd asked me 2 months ago, I'd have said, well, it will extend as long as we need it, as long as we've got the coronavirus in place. I'm a bit concerned that we haven't heard anything from government about it at all. They're going to have to say something soon. IPSE has publicly gone out there. We've got a press release out there today saying, please extend this. People shouldn't be forced to choose between their health and their income, etc., etc., etc. So the government, I'm sure, will make an announcement on this soon, and probably to Parliament. So we'll just be keeping our eyes peeled on that, and we'll update you, of course, and you'll see it anyway through the news. We also say that if you do extend it, it's a great opportunity now to revisit this problem around the newly self-employed, because the newly self-employed have been unfairly missed out on this scheme. They are exactly the people who you should be getting this scheme into. We do have a mechanism. They can do their tax return for the last year. The government say they're worried about fraud. Well, maybe there's something we can do to mitigate that. We don't feel like the government has really examined this and weighed up that risk against the benefit. And I think if we extend it now, we have to re-examine that idea of, of letting the newly self-employed into it, people who have only been trading since April 2019. We will continue to call urgently for more help for those who work through their own limited companies. As we've discussed, the furlough scheme, it doesn't take account of your dividends, which is how most limited company directors mostly pay themselves. So it really isn't particularly great for them. There's also the problem around the RTI event, and Alistair pointed out we had a question about that. All I mean by that is that the payment must have been made prior to March the 19th and made through the RTI system, as it would be if it's a salary payment. So it all comes down to, if you've got one annual payment, do you make it before March the 19th, or did you in the last tax year? But did you make it before March the 19th, or did you make it after that? If you made it after that, you're not in the scheme, and that's more than just a shame. That is a very, very, very unfortunate part of the way this works. I don't think there was any deliberate intention there. They were just. You've got to bear in mind this scheme is set up with employees in mind, and a director as an employee of their own company can make use of it. But they were really gearing this at large company that's going to lay off lots of people, lots of employees. But they don't want them to do that. They want them to retain those jobs, job retention scheme. So we're going to pay the company's money to pay those people to sit around not doing anything, waiting for the economy to get back up and running so they can get their jobs back and we can motor on. That's the whole point of the job retention scheme. Company directors are an awkward fit. And the other thing about it, which I haven't mentioned, is the requirement to furlough yourself if you're a company director is very, very difficult, because there's quite strict rules. You're not allowed to do any work for your own limited company. Now, you're not allowed to get any income in, right? And if the government see you've got income in, then you could be in trouble if you do go onto the furlough scheme. But also, more than that, you're not really supposed to do things like communicate with your clients. That's very difficult if you're trying to. The whole point of this is that you want your company to be kept on life support so that you can click back into gear when the time is right. We've been calling on the government and saying, look, can't we just have one clear rule on this? As long as they're not actually making any money for their own limited companies, then every other type of work that they're doing is fine in terms of marketing, advertising, planning, talking to clients, drumming up future business. But we haven't had any of those reassurances. So the furloughing thing is very, very difficult. And that's why we've been saying that actually we probably need something entirely different for company directors, you know, or if, at least if they are going to have to furlough themselves, at least make account of their dividend income so it becomes a slightly more generous scheme to give them some proper income coming in while they're making this huge sacrifice about furloughing themselves. We haven't had very much. Well, the government hasn't said anything on it, and we've said it to the Treasury Select Committee. The chair of the Treasury Select Committee, to be fair to him, Mel Stride, has made a big thing on this. Even the Minister Paul Scully, who, by the way, we have on our webinar next week, has put out a call for ideas to help company directors, and government has just said nothing. And we've had one question from Michael saying, you know, it is the opinion of many, including Martin Lewis, that the government is deliberately excluding limited company directors from support schemes. And Michael suggests that we put that to Ed and say, you know, is this also his opinion? Which we will do when he joins us, hopefully in the next 5 minutes or so. Now, I don't know. The government say that that's not absolutely not what they're doing, but you know, you can't help but feel that as they're pushing through IR35, and they really don't seem to have said very much at all to help company directors, that, you know, it does feel a bit like they have been deliberately not picked on but excluded from some of these schemes. So you know, from a Conservative government, and bearing in mind that not all limited company directors are running what the government like to call personal service companies. There's a whole range of small businesses out there. Really, this should be the sort of this is what we would imagine a Conservative government would be all about, supporting those people. And at the moment, they really don't feel supported. And there's lots of little groups that have sprung up, and we've had some questions in advance from including from a solicitor who's working with one group who is calling for more help for limited company directors, and we're supporting another group called Forgotten Limited, and they're doing lots of work on this and drumming up. If you Google them or find them on Twitter, they're doing lots and lots for campaigning to try and get more help for limited company directors. It does feel to me like this is a glaring hole in the support packages, and I don't really know why the government don't seem to want to appear, at least, to be doing more to plug that gap. And finally, of course, we're calling for the IR35 changes to be pretty much abandoned, but at the very least not brought in this finance bill for April 2021. Now, I'm going to come around to a few more of your questions while you're while we're waiting for Ed Davey to join us. We had one more of a comment really from Adrian. It said that the bounce back loans are only good if you know that there's going to be an economy which is functioning and that you are going to be able to pick up enough work once this is over to pay back those loans. This is exactly the point that's been made to us over and over again, and it's a very, very good point. People don't want to get into debt now. This is not a time that people feel comfortable taking on debt. Appreciate that the loans are on generous terms in the initial period at least, but really what people want is to make use of some of these grants that they're seeing other people getting. So we've got the self-employed scheme for sole traders, they're getting grant money. You've got the furloughing scheme for employees, they're getting effectively grant money. But company directors are basically being told, well, have a loan. And they're very, very nervous about taking on that debt. And of course they are, because it's such a difficult financial situation. So, I mean, you're not the only person saying that, Adrian. Maria made the point again about the RTI event and the 19th of March. This is affecting a lot of people. I didn't realize how big initially the population were that were in this bracket of people who pay themselves after that date. But now I know that lots and lots of company directors do that. And so even those that want to make use of the furlough scheme, despite the fact they have to furlough themselves, despite the fact that they don't get any account for their dividends, they still can't because of this 19th of March. I don't know why the date wasn't the 5th of April. I don't really understand why that was. There probably is a reason. but I don't know why that is. Alistair, have you seen any other questions cropping up that we should answer?
Yeah, there was a couple. One was about the self-assessment payment on account that would be due in 31st on July, and that being deferred. Somebody was asking whether that was something you had to apply for, or whether it was automatic. So that is an automatic offer, so there's no applications required for that. It's optional in that if you can still pay it, then the government would obviously like you to pay it, and it might be helpful for your own finances if you do in some respects. But yeah, that's an automatic offer, and you won't have any penalties or interest for late payment charged on that tax that you owe if you choose to defer that. And then there was another question I saw on universal credit, just around whether that's done by individual applicant or
Alistair, you've frozen. I don't know if that's just me or if that's you, but I will take over for a moment. Alistair, if you can hear me, could you perhaps close your webcam? Oh, you're back a bit. Are you there? Okay, I'm going to carry on talking anyway, because I've seen some questions come up that I want to address. Now, someone's asked a very interesting question here about, so Ian has said that the government's saying don't use public transport, go by foot, cycle or car. But the Mayor of London is restarting and indeed increasing the congestion charge to discourage cars. What's IPSE and Sir Ed's view on this conflict? I don't know the answer to that one, Ian, but I do think that that's one of those things, isn't it, where you've got this problem with the messaging here. And I think the whole thing around public transport for me is very, very difficult to get over. You know, go to work, but don't get on public transport, but there is public transport there available. And now this point that you've made, which is the first time that I've heard of it, I agree. I think that there needs to be some joined up thinking on that one, because if we're saying drive into work, then why are you increasing the congestion charge? I think that that's definitely a problem.
I think I am back now, Andy.
Oh, well done. You're back, Alistair.
Well, I may just keep the webcam off to help the internet in my house.
Good idea. Well, we were doing so well, weren't we? I think that Ed is about to join us. I can see that he's possibly online here, but we'll just wait until he. There we are.
Hi. Hello there.
Hi there. How are you, Ed?
I'm good. I'm sorry I was just late on another call. I could do with a haircut, but apart from that, I'm fine.
Yeah, it's the same for all of us, I think. Well, look. So Ed, we've been running this webinar, and we've been talking through the various schemes that are going on to help people through this coronavirus, with a particular bent on how they're helping the self-employed. And I know that you were very instrumental in calling for the government to introduce some more help. And indeed, we talked, didn't we, just before the introduction of the SEISS scheme and the job retention scheme and all of this, and thinking, what's the government going to do around this? Do you mind if I leap straight into some questions? Or do you? Okay, great. So we now have the SEISS scheme up and running, and there's still no word on whether it will be extended. Conspicuous by its absence is any kind of statement on that, given that the government has announced the extension of the job retention scheme. Are you hearing anything around this? And do you think the government should extend it?
Well, I absolutely do think it should extend it. We know that it's got some gaps, and no doubt we'll come to those. But getting it in the first place is really important. Let me actually be fair to the government. They got it up and running before they said they would, and the experience of some of my constituents has been that actually it's been a relatively positive one. Although I'm not sure if any of them had the money into their bank accounts yet, so that's when it gets very positive. But I think there can be no doubt that it should be extended. I cannot see any reason why it shouldn't be extended along the identical lines of the furlough scheme extension. And I've already pressed the government on that, as you know. I asked the Prime Minister a week last Wednesday, and I'm afraid he just didn't answer the question. So we are pushing on that, and I'm sure you guys are too. And the earlier we get that confirmation, the better. I have a fear that if we don't get it soon, they'll just say, well, you know, everyone go back to work, what's the problem? When we know there are an awful lot of self-employed people who are do something which is so close to their customers, you know, hairdressers, for example, well, it's going to be really difficult. So I think we've got to press them hard.
Yeah, I agree, and actually, I do know some people who have had the money into their bank accounts from the SEISS scheme. So it definitely is working well, and credit where credit's due to HMRC and Treasury. I spend enough time giving HMRC a hard time, and I think that, you know, credit where credit's due, they've got that working very well. But we agree, yes, there's no word on it. And I was just saying in answer to someone's earlier question that although you know, a couple of months ago or a couple of weeks ago even, I would have said, oh, of course it will be extended as long as it's needed. And because they're being so quiet about it now, it makes me worry that they're not going to. So I agree with you.
Yeah, and just in terms of putting the pressure on, and when I asked my urgent question before this Easter recess, and then 2 days later the Chancellor came up with the scheme, we could sense that there was not just a joint view across opposition parties, but there was a real rebellion getting going in the Conservative Party, and that was really important. And so on this one, I'm hoping Conservative colleagues will pull their weight, because, you know, clearly with a government majority of 80, the Chancellor will only really budge if he thinks that Conservative colleagues are getting restless on this issue. So, I mean, I'm probably telling my grandmother to suck eggs, but if your MPs are Conservative, we've got to target them, because, you know, I will keep pushing it, guaranteed, but we need some of them to stand up too.
Yeah, absolutely. Absolutely. And do you think that there's an opportunity, if they do extend it, to bring in the newly self-employed? This is the group who've only been trading since April 2019, and they are excluded from the scheme at the moment. But we've now had that tax year's finished. In fact, by the time the scheme was announced, it had just about finished by then. Is there a chance now to get people to get those tax returns in and get them in to the scheme? What's your view on that one?
I think it's essential. And you know, we've been making that point along with others, that needed to be done actually in the first iteration. They needed to find some way. If I have any sympathy for HMRC on this point, and it's not a lot, I'll be honest with you, I think they were worried that their systems would have to be that much more refined. And when I talked to officials, they were keen on making sure that everything was as automated as possible, and they worried that if they didn't have a tax return duly completed, that the automation wouldn't be there. And all the different schemes I'm sure you and others put forward, as we did, they just said, well, this won't fit in with the computerization automation that we feel is essential. That, of course, is no longer the case if someone has got a tax return. Moreover, now they know the system is up and running and robust, it seems to me reasonable that they now have got some time to make some alteration to take into account these people. And I feel very strongly about this, because, you know, a lot of people have put a lot of money in some cases, or taken big risk at least, moving out of employment in many cases. I've got friends and physicians who are really, really in trouble because they took that risk, never imagining this would happen, and the government hasn't been flexible. So I think absolutely, if we get an extension, I think the argument is easier to make. But I'll be honest with you, even without an extension, I think they could open up the scheme now as people have got tax returns.
They could. That's absolutely. I agree. I agree entirely. Right, I just want to move on now quickly to company directors. This is a big group of people. There's been a lot of discussion around company directors. They can make use of the job retention scheme, but it's only on the salary element. The government say that working out the dividend thing is too difficult. They don't know where the dividends are coming from. They also would have to furlough themselves under that scheme, so it's not ideal. What, if anything, do you think should be done to provide more support for company directors?
Well, when they opened up the scheme to start, it was clear that the newly self-employed and those who were incorporated were the big gaps. And what we did, and what I did as a Treasury spokesman for the party, was I talked to a number of people, and I think I probably talked to you, Andy, and talked to a number of tax advisors, and we came up with some schemes which, worked, we think, in a relatively automated way. And I wrote to Sunak, I haven't had a reply. This was early April, to show that we could bring limited companies in, but there has been not a single sign or anything that they're going to move on this issue, which is deeply frustrating. I'm sure people on this call realise, because you'll have looked at it in detail, no doubt, that is this issue about dividends, and they somehow feel that they could be giving money to people who weren't really self-employed. Now, I think this is what in the scheme we sent in. We tried to find ways to deal with that, ways which were linked to the structure of the company, whether the director had also was an employee, as is mostly the case for those people who are on modest to middle incomes, so not the big investors who might be using this model. So that could be a check. But ultimately, a declaration could be there, so there could be some sampling afterwards, and if someone had committed fraud, they could pay a heavy penalty. So there are those sorts of checks that we thought were obvious. But I hope this doesn't sound too blasé, but I just think they're making too much of this point. Because, first of all, the amount of support is capped. It's not an unlimited amount of support. It's actually relatively modest. It means an awful lot to people who are self-employed who aren't earning huge amounts of money. It's not a massive deal if people are on extremely high incomes. I mean, saying that it's not helpful, but it's not a massive deal. And I think, therefore, the structure protected the taxpayer to quite a large degree. And we also made proposals about how forms that could be sent in could show that the dividends that they were claiming for from their previous tax returns were related to self-employment and not to investment income. So I don't buy their excuse.
Well, this relates to another question that we had in. Sorry to interrupt you, Ed.
Yeah.
There is a view out there, and apparently it's been expressed by the money-saving expert Martin Lewis, that company directors have been deliberately excluded because the government doesn't really like them, and they don't like the fact that they pay themselves via dividends, and they would rather they were all on the payroll, which links into, I'd also like to touch on IR35 as well. And so there is this sort of feeling that, in fact, the government has almost deliberately left them out. That's, of course, not what the government is saying. They're saying, no, we want to, it's just we can't work out this dividend problem. What's your view on that, Ed?
Well, I mean, I'm not a conspiracy theorist, but I think Martin Lewis is onto a point, and the evidence might come to these issues. If you look at how they've been treating, HMRC's been treating the self-employed, over IR35, of course, over the loan charge. There is a view within the Treasury and within HMRC that if you've got a limited company, you're on some sort of dodge. This is frustrating for two reasons. First of all, well, three reasons. First of all, I remember the finance bill back in, I forget when it was, 2000, 1999, 2001, where the then Labour government were actually encouraging self-employed people to incorporate. So the government policy to encourage, number one. Number two, it's actually quite a sensible way of managing your business when you've got multiple clients. That can really help. And indeed, sometimes clients require it.
Yeah.
And I also think it's pretty insulting, actually. Pretty insulting. And you can't have it both ways. You want a flexible labour market. You want people to take responsibility for their pensions and their holiday pay and all the other things that otherwise they get in employment, and then you penalise them. And I think there has to be a much bigger debate about self-employment and the value we want to put on it as a society and the way we want to use it in the labour market. It fits in a little bit with gig economy and those sorts of debates. But the government seems to want to have its cake and eat it.
Well, yeah, sorry to interrupt you again, but yes, that's pretty much our feeling too. And one of the problems with the IR35 rules, of course, is that it sort of, what it does is it makes someone employed for tax purposes, but not for their employment status. And we've had some questions in from a couple of people from the BBC, and they describe themselves as part of the BBC's self-employed PAYE workforce. So and my understanding is that there was a big IR35 kind of audit within the BBC. It was quite famous and everyone heard about it a few years ago. And now lots of people, they're still self-employed. So they don't have any sort of unfair dismissal rights or holiday pay, but they're on the PAYE system. And so, and they've really missed out now because they can't make use of the SEISS scheme because they're not self-employed. They haven't done the tax return in that way. And the BBC won't furlough them because they're just on in and out contracts here and there. And that really highlights, I think, this problem around tax and employment status and how IR35 is driving a wedge into that. And therefore, isn't it crazy that the government, in light of the House of Lords report, which was very critical of their approach on IR35, our view is it's crazy that the government is trying to lock in to this finance bill the changes to IR35 to come in for April 2021. Do you have any views on that, Ed?
Some strong views. I mean, in the election, we campaigned for a review of IR35. The government said it was going to do one. Then it basically dropped that. Now it says it's going to do a review, but it's going to press ahead with the legislation anyway. So I actually said this in a debate, what rather obscure debate on a Ways and Means resolution earlier this week. You know, it doesn't suggest good faith, does it? That you're going to have a review, but you're pressing ahead with the legislation. I mean, normally reviews happen before you make the final decisions, not while you're implementing them. And I think that's just disingenuous and not what they said for the election. And I think, you know, the evidence, they point to what happened in the public sector as if that is evidence. And we all know that private sector employers will take a slightly different review about their risk appetite on the liabilities that they might face. And, you know, they're all risk averse. And then we've seen what's happened. The people losing their jobs, people going overseas. In other words, a big negative to the exchequer. But, you know, there's no sort of rational overview for this. It comes from this suspicion. So I think, you know, on the back of the House of Lords committee, and I hope the finance bill, because I'm not given up, by the way, that we could defeat the government in the finance bill on this particular issue. I hope we can get some common sense here. And there is a sort of, as you were alluding in the first start of the question, there's a sort of moral issue here where this whole system is being used to take away people's basic rights. That wasn't the intention. That shouldn't have been the intention of IR35. Where was that debate? Oh, we're going to take people's employment rights away, but still tax them. I can't remember that debate, but that is what is happening. And I think I think this is actually a really very big issue affecting a lot of people, and I think we're right to be angry about it.
Yeah, I mean, I've been looking at this IR35 thing. I've been working at IPSE for 10 years, and I've come to realise that it's a very, very difficult area, and it goes right to the heart of the whole argument over tax and employment status. And I feel like the government is ramroding through this thing in this drive to get everyone onto the payroll because RTI is wonderful and they just get their money and it works better. And I can understand that, but that's not how people are working in the modern era. And we need that flexibility, and we do need to do something more. We need to create a tax system which understands modern working, and the government seems to just really they just want to push us all back into the old sort of PAYE system, which I don't think works.
There's no time to butt into this to you, Andy. There seems to be no appreciation of the advantage of having contractors. Because what contractors do, in my view, I mean, I'm not a contractor, but you can tell me, is that because it could be very expensive for a company to have a whole load of people on full time who are special in certain areas, they can take their specialisms and their niche qualifications and they can take them and they can learn skills and then they can apply them to another company. And so the wider economy benefits and productivity goes up because these skills are being shared across companies. Where is the economic analysis of the benefit to the economy of that?
I couldn't agree more. We've tried to do that actually at IPSE. We've done various research projects trying to demonstrate the economic benefits of contractors and what they bring to the economy. We believe that freelancers contribute around 305 billion a year to the economy in good times. I'm not quite sure what's going on right now. But yeah, and they enable companies to be more innovative. So, you know, a contractor can go into a company that's perhaps thinking about expanding into another market. It doesn't want to take on permanent employees because it's not sure, but the contractors will come in, they can do some market research, they can build a prototype, they can market it, and then the company goes, do you know what, we can make a go of this, let's employ some more people and actually move forward and do that. So there's lots of good reasons why it's good to have contractors, and I can't really understand why the government, sorry, it's very noisy in my road at the moment, I can't really understand why the government wants to constantly be sort of pushing them back and trying to dampen their spirit. And surely when we come out of this crisis, we will need them more than ever, because we'll need that flexibility to get things moving again. I just want to ask you a couple more questions there before we have to go. When the Chancellor announced the SEISS scheme, he suggested that there would be an increase in the national insurance contributions of sole traders, self-employed people, as a sort of quid pro quo. What are your thoughts on this? Is it right to make a long-term increase to tax rates off the back of an emergency scheme, particularly when so many people who will be hit by that tax hike won't have benefited from the scheme, such as the newly self-employed?
Absolutely not. I mean, let me just step back from this position, because this is the context that I'm trying to think about it, and I'm trying to get my head around it like a lot of people. The country has borrowed a huge amount of money to soften the blow, because the analysis is really clear that if we don't stop redundancies, if we don't stop companies and going to the wall, the long-term impact on the economy will be far more costly. So it's a sort of collective insurance to prevent something worse happening as a result of this pandemic. So the country then has this massive increase in its public sector debt. Do we then say, go revert to austerity, have tax rises here and so on to correct that? That's really bad economics. Because actually this is a different scale to the financial crisis. It's more like World War II, actually. And what happened then was the Bank of England held the debt for the government and basically rolled it over, and it's paid back very, very gradually, so it wasn't a millstone round the economy. Because the only way really for it is to grow out of this. And if you stunt that growth through lots of tax rises and lots of to pay back the debt and lots of spending cuts, I'm afraid that will just make things way worse than they need to be. So we are in interesting territory. We're getting to sort of macroeconomics about printing money, monetizing the debt, the relationship between the Bank of England and the government. But we need that debate, because otherwise, on the back of this, they will justify things which they might want to do anyway, and which were wrong anyway. So we have some really clear thinking here, and you know, taxes sometimes have to go up, and absolutely do, if you're buying something which is particularly just current spending, you know, maybe on the NHS, maybe on care and so on. But one needs to do that in a way which isn't going to drag down the economy. And it does seem to me that that random statement had no real economic justification behind it. And I thought it was a bit of a nasty threat, and spoke volumes for the thinking in the Treasury and HMRC, which is, you know, quite narrow. And I think we have got to stand up, and we've just got to say, you know, you've got to completely rethink your attitude to self-employment. Let's have a proper debate about this. If you really think people are not being taxed enough, make that justifications on the back of some analysis, not on the back of an envelope.
I do that about 5 times a day at the moment, start talking and then realize I'm muted. Yeah, you're absolutely right. that's exactly what our members say to us. In fact, some people say, it's not, I don't mind paying some more tax, but I don't want to be told that I'm acting like an employee when I'm not acting like an employee. I don't want to be shoved into an umbrella company that I don't want to have anything to do with. But, you know, just recognize that I am a freelancer, and then let's work out an appropriate tax system for that, if that's what we need. But let's build the tax system around how people want to work now, rather than make people work in a way which suits your tax system, which is so often the way that the government wants to do things. Listen, we've taken up loads of your time. We've gone over time. Ed, if there's anything else that you'd like to say, please go ahead.
No, I except to sort of underline a wider point I was trying to make. I do think we need some fresh thinking, taking into account COVID, yes, and what it's done to the economy with the debt levels and so on, but overall what is exposed that was already there, and that goes even beyond you and your members. There's an insecurity in the labour market, which I think is not nice for society and for people. And we've got to find a better balance between the flexibility, which I think is a huge benefit, which we talked about earlier, and that flexibility which actually some people like building their lives around, which I think is, you know, wholly good for the economy and for individuals, but keep that benefit in a way which still treats people properly, and that needs some real thinking and not piecemeal knee-jerk reaction. You know, I'm really keen to work with you guys over the next coming months and years, even trying to get that balance right, because I think it's actually quite a much needed long-term reform.
Well, thank you very much, and we absolutely would love to work with you on those issues. And we've been calling for a full review of self-employment and of the tax system around them, and the employment status and the whole thing. So look, thank you very much, Sir Ed Davey, joining us, so generous with your time. Great to have your thoughts, as it always is great to hear from you. And yes, I'm sure our members appreciate it. To all our members who have sent in questions, I'm so sorry we haven't had time to get round to all of them, but we will do a write-up of this webinar, and we'll put it on the website, and our FAQ page will also be adapted to take on board your questions. So thank you very much. Thank you, Sir Ed.
Thank you.
And goodbye. Thanks.
Bye.